Hi, good evening, everyone, and welcome to the Let's Talk About Market episode number 83. If we see the Nifty index today, it was down, but it was a mixed market today because the small cap did really well, micro cap was okay, mid cap was also holding out. So, overall, if we see the breadth was okay, but broadly, if you see, it's a lackluster market right now, and we had spoken about this that as long as the Nifty index does not break above the 26,000 mark or 26,050 mark decisively, until then, there are risks that are there on the downside. Now, what is the current setup? Because many of the important indicators are coming to an oversold zone. So, what lies ahead is something that we'll talk about, and how to deal with the indicators, which are kind of showing us mixed signals as of now. So, let me quickly share my screen, and please let me know once you all are able to hear me properly and you all are able to see my screen. So I'm just opening the Nifty chart. Please, meanwhile, if you all are able to see my screen, just put it in the chat box. Okay, thanks for the confirmation. So when we look at the Nifty index, see broadly, even I am frankly trying to understand what is the broader range. I mean, is it this or is it this, or are we headed into some deeper correction? To be very honest, I am not so sure about that. But as of now, what has certainly happened in the short term is a break, a break below this trend line. Okay, so now the longer it sustains below this trend line, it will look like a breakdown. And as of now, what is probably happening is that there is a breakdown, and there seems to be some bit of consolidation happening. If the Nifty index fails to break above the averages, or probably this 61,000 retracement level, which is say somewhere around 26,025. Okay, until this level is not broken out on the upside, it might look like that there can be some consolidation or something like that, and then there is a risk of a correction, which is very much possible in the near term. So this is something that we need to be mindful of. But in the very near term, what can possibly happen is that if this low is saved on the downside, then you might end up getting some sort of pullback in the near term, which can be a 200-300 point sort of pullback in the near term. And what kind of justifies that as well is the short term sentiment indicators, because if you see the percentage of stock with RMI buy, that has now come to around 22 levels. Okay, which appears to be which is kind of approaching the oversold zone. Similarly, if you see the sentiment indicator, so swing was already in oversold. From there, it is trying to recover. But if you see the average swing, it has fallen and it has now come to 15 levels. Ideally, if we would have seen, so we need to see, what is the call minus put histogram today. But say, for example, if the call minus put histogram comes to around these levels, okay, which is probably towards this orange line, then there is a possibility that the Nifty index can see some sort of durable bottom and we bounce back. But as of now, as I told you, I mean, these are all indicators which are still towards the lower end. So maybe because these indicators, act as a very, very near term, short term, and short term top and bottom indicator. So what can happen is that, sorry, I was on this chart. Sorry. So what can definitely happen is that we can end up seeing some pullback towards this zone, maybe a retest of this trend line as well, and this pullback can lead to this swing indicators and all which are in oversold zone. It might get them out of that oversold zone, and that's how it can play out. But I'm still hoping, or I'm still expecting that the Nifty index is not out of the woods, mainly because when a major bottom has to happen, right? At least in the short term. So you can see over here that this percentage of stock about 20 SMA and so on. These all also come towards the oversold zone. Okay, that's where you can say a lot more confidently, because see, if they are in between something like this, okay, it is hard to call it really a bottom. And in fact, i- if at all, a major correction happens, say something like this, then you might end up seeing something like this, where this was the first time basically where the reading got oversold, and after that it kept on being oversold for some time, before witnessing a bounce. So that is why, as I'm saying, we need to be very mindful of the trends that we are seeing, because if the broader trend is bullish, then the oversold readings will work very well. Okay, but if we are getting into an meaningful correction, then these all indicators will just end up showing divergence before they ultimately bottom out for the short term. Okay, so as I told you, I mean, this is one indicator which is still at the middle and not indicating something. And also, if you see within sentiment indicators, it is the OIPCR, the 9-day average that we look at. Even that is somewhere in the middle and not towards the lower end. And typically, if the OIPCR falls, the market also tends to fall, like you see over here. And when OIPCR rises, market tend to rise. So since this is also falling, it leaves some room on the downside. I mean, basically, this is what we have to be prepared of. So when we look at the broader structure, like I'm highlighting for a while now, that there can be some pullback, and in that pullback, broadly 26,036, that we saw as the 61.8% retracement level, right? Sorry, 26,030 approx. That is the 61.8% retracement level. So as long as it is below that, maybe this would just be a bounce, and this is something that we need to be careful of. Okay, now as we are seeing that, while the market is consolidating sideways, and not seeing much gains, the ones which are stronger index, like PSU bands, it has made a new high and rising higher. Similarly, if you see metals, again, metals made a roaring comeback today, and it was up almost 2.7%. So, so as long as the trends are there, don't try to bet against that in the anticipation that if Nifty falls, then everything will fall apart. I mean, that is the beauty of technical analysis, that people's mood is in the price. As of now, metal seems to be bidded higher, which means that possibly there might be some positive trigger that would be there. So following the trend itself kind of makes a life very easy. And broadly, like I mentioned, I mean, don't try to bet against it. Be with the trend, and try to be with the trend as long as you're not getting any signs of a reversal. So these are the ones which are good sectors. I had spoken about reality, not doing good, and you can see that today also it was down 0.8%, which is not good. FMCG has also turned out to be an underperformer, and in fact, IT, which kind of was indicating a bounce from a 40-day exponential, it is now again back over there. So if we don't end up seeing, Nifty IT making a comeback and this averages breaks, then again this might not be a good sign, and we might end up thinking that can it, retest this trend line support and so on in the coming days. So that is the risk that may end up, that we might end up seeing. So there's something that we need to be cognizant of. Uh, so yeah, I think as of now, if we see, it is broadly PSU and PSU bank and metal, which is good, and PSU also to certain extent seems to be doing well, but so far over there, we don't have this clear cut breakout as such to feel strong about that. But the issue is with the Nifty index. Okay, I mean, which so when the way we think about it is that when the mother market, which is the Nifty index, that is not great. I mean, even if you try to be with the outperformers, getting absolute gains would be very difficult. So that is where it is. I mean, you have to try and do that in phases, which means that if at all you feel that the index is likely to bounce back in the near term, that's where that would be the time probably to look back to who are all the outperformers and try to try to make some trades over there. But when things turn down, okay, then focus back to the the losers or the laggards, because they are the ones where you might end up seeing prices fall even further because they are relatively weaker stock. So that is the way to think about it. Now, because I told you that there are some stocks that are not looking good, so maybe you would want to see. Wait, let me just do a weekly chart. See, again, I am just throwing an idea. You can probably try and do whatever you want in terms of scanning and so on. But uh, but broadly, if you see, so from or you can take it from this high, actually 30th June. Okay, so you can go into the scanners and you can go into the look back period as well. I'm taking exponential average and I'm taking a weekly time frame. I'll tell you why. Okay, below, sorry, we'll take 50 week. And so basically, when is it? So 23rd June, meaning there will be 5 days that we'll have to 23rd. Yeah, so it is 27. Okay, so now over here, I'm trying to find a list of stocks that are below the 50 EMA since this high was made. Okay, which means that in this entire pullback they have not participated. So in this you can see stock like ABB, which is at the support level, and now there is a risk of it breaking on the downside, right? You see Colgate, I mean, which is already a weak stock. Concor, it is trading below 50 week, probably since June. Crompton, what is this? IRCTC, ITC, REC. Siemens had a corporate action, so we can avoid that. But Syngene, you can see that even in Syngene, it is below this, and it has been consolidating. I'm not sure if it is, sort of trying to form this kind of triangular pattern. But if this pattern breaks on the downside, then again it will not be a good sign, right? So this is how you may want to do some sort of scanning, or in the short term that you want to see. Then this was the high that was made, right? 23rd August. Sorry, 23rd October. So you can do it on daily chart below 50 EMA from what is this date? 23rd October. And that's how you can do such scans and try to find out which are the weak stocks. Again, I think mostly you will get similar names. uh, yeah, so the new name that appears now over here is Dixon, DMart, Exide. Yeah, I wasn't aware Exide also falls in this list, but you can see that these are not breaking the 50 averages, right? So these are again the ones that are weaker ones. So so like that, as I mentioned, you can try and do any of those scans. Similarly, if you want to find it for the strong stocks, you can simply make it above this and try to find stocks that are trending higher. So this way, it will help you to segregate which are the winners and which are the losers, and help you concentrate on those losers more when the markets are going down, and help you focus more on the outperformers when the market is doing good. So broadly, this is how I would think about it. In fact, like I told you, maybe you can also use heat map also to understand on a broader level that which are the index that are not doing good. So again, there can be some multiple ways that you can try and find out which are the outperformers, which are the underperformers, and so on, and maybe make your list accordingly. But as of now, I just think that in the short term, we don't have signs of a reversal yet, while the medium term setup is suggesting that there is extreme bearishness. And why do I say that? Because the FIX positioning now is at a record short. I mean, this is record short on history. Basically, we have this data for last 13 years. I mean, they have never been this short, and even the long percentage is at 7.54. So while the medium term setup does tell you that I mean, the sentiment is very bad, but the problem is that in the short term there are no signs of reversal, and therefore we cannot rule out a risk of probably a correction till year or maybe till year as well, right? So that is the risk that is there at this point of time. Now I'm not saying that levels like say 24,500 will come for sure, but these are the levels that are visible on the chart. And who knows, I mean, Trump can do anything. One fine day he can come and he can say that we are levying 100% tariff on India for whatever XYZ reason, and this can lead to a problem. So basically, what I'm trying to say is that when things are ugly, don't try to catch the bottom unless you don't have all the indicators screaming at you and pointing out towards a big bounce. Until that, don't try to be brave to catch the top. In fact, either try to be long after you get the confirmation, like say for example 26,030 breaks on the upside. That may also lead to a bullish crossover in RMI, right? So then you have some evidence of turnaround happening. But as of now, momentum index is in sell. Nifty is threatening to break the 20-week. On weekly, RMI is already in sell. So not a very good setup to have, or at least the prices have not corrected that much to make you attractive to take a contra bet as such, right? So that is how I would put things for today. Let me know if you all are having any questions or so. So Beebull says that overall market is bearish. Can we see considerable correction in metals too? See, Beebull's week, like I mentioned, don't try to anticipate that. Let the chart confirm weakness. I mean, when the weakness has to happen, it will end up breaking the averages, some important support levels as well. As of now, when it is not doing that, it is wise to not preempt that. This is what I can tell you. Om Prakash says 4 to 7%. 4% on index at the current level will translate into somewhere around 1,200 points. 7%, not sure of 7%, but is there a risk of a 4% correction? Yes, there is a risk. Will it happen for sure? I am not too sure, but are the charts indicating that? or are the charts telling you that those levels are possible to come on the downside? Yes, those levels are possible, but uh, I mean, so far this has been a slow grind for the market, even on the upside and on the downside. So, either ways, it may not be easy to take trades which are positional, because markets are bouncing back in between very sharply. So maybe considering short-term trades, like maybe 1, 2, 3, 4 days kind of trades might be wise, because trends are changing very fast, and there is like five, I mean, 1,000 point correction, then within 2 days there is 500 points kind of pullback, and we are kind of seeing sharp moves on either side. So so yeah, I mean, need to be a bit careful with that. But if you ask me, is there a possibility that Nifty can come to 24,500? Yes. Am I confident of that happening? The answer is no. But can it happen? The answer is maybe yes, it can happen, because if you see the weekly RMI, and a lot depends on this week as well, because weekly RMI, you can see, is in sell right now. The prices are exactly at the 20-week average. So if the 20-week average breaks on the downside, then there is a risk of a correction towards the 40-week average, which is, say, right now around 25,000. And if that breaks, then even the lower band can be tested, and the lower band is around 24,674. So these are the levels that you need to watch out for very carefully. And especially this weekend, we need to see if the 20-week is saved or no. If 20-week breaks on the downside, and someone asked me that can this level can come, I would say yes. As of now, till 20-week is defended, you can say that it's a tug of war between bulls and bears at this point of time. Any other questions you'll have? Praveen says, if Nifty 500 is forming a triangle, Nifty 500 forming a triangle, let me check. Which triangle are you seeing? Are you seeing this? I don't know. Are you seeing something like this, Praveen? Hmm. Actually, I also frankly did not notice this pattern. I'm not sure if we can make sense of this. But yeah, the fact is that if this low is broken, is this low is not broken on the upside, then yes, there is a possibility of a pullback of this entire decline. This is something that we need to be open for, and till the time 61.8% retracement is not broken on the upside, the risk of a correction does prevail. Whether it consolidates over here and then correct, or we end up seeing a pullback which is sharper and then it corrects. I mean, these are all variations that can possibly happen. But till the time we are above 61, below 61.8% retracement, there is a possible trouble. अजय जी गोल्ड पे तो अजय जी स्ट्राइक पे गोल्ड सिल्वर नहीं है एज ऑफ नाउ, तो एनालिसिस करना पॉसिबल नहीं है. Okay, Praveen is saying that on the hourly chart. By the way, yes, for the hourly chart, for the other indices, okay, I understood now what you're trying to say. Is this a triangle? I don't know. It can be. It can be. I don't know. But over here, basically in many of this index, so good you brought up this point. But in many of this index on the hourly chart, there is a case where the RMI cycles are going back to the zero line and then trying to turn around. So these are often signs of risk that can, risk that a pullback is possibly done. Okay, and this correction can come because over here also you see that lower band and 40, upper band and 40 around the same line. In fact, small cap has nearly tested that. Okay, mid cap is somewhere below that, but again, I don't know. If you ask me, can this be a triangular pattern? We can know only after probably 1 or 2 days. As this bounces back from here, only then we can get that clue of whether the triangle is actually forming or not. Until then, it is more of a guesswork. But as of now, if it is consolidating below the 40-hour exponential average, then it is not good. Okay, because what is happening is that we are not seeing a deeper retracement. And you remember me telling yesterday, the lesser the retracement, the weaker that trend is, which means, if there is the sharp decline and there is a very less retracement, then this retracement is very weak, which means that this trend is very weak of a bounce, and there is a risk that a further sell off can happen. So, the only thing that I'm worried about here is that, if you see the micro cap, barely any pullback, right? If you see mid cap, also barely any pullback. So, is this a sign of a weakness? I am not sure, but let's see. Let's see in the coming days, how it behaves. Mandar says if there is a buy signal in RMI 1 hour time frame, should we wait for any confirmation or either at a higher level? No, so Mandar, there is no right or wrong answer to that. It all depends on what is your time frame that you are looking at and what is it that you want to achieve through that, right? It all depends on that because typically, if the market is not showing a bottom and you're trying to play a buy signal, the least that you can expect is that there can be some bounce that is possible. That's about it. Don't try to think beyond a pullback as of now, especially when the markets have not reversed. So I think when you think that, so the question of bottom fishing goes away. It's just that to pull a, I mean, it's just that you're trying to play a short term pullback, and that is how you just need to think about it. So, Ajay, you said that you have subscribed to Strike. I think Strike में RMI आ जाएगा तो it may make your life easy. I'm not sure why would you want it on TradingView. Yes, of course, in TradingView, if you want this gold, silver, and all, maybe that's why you might want RMI. But I honestly don't know the charges. You can just contact someone in the sales team. As I've told earlier as well, in this web.strike.money, you go to help, raise a ticket, okay, and you ask them. You just put over here, select the relevant choices, uh, relevant options, help and other, and you can write that I want to buy RMI on TradingView. What are the charges? They will probably come back to you, because even frankly I don't know the charges for that. 50 Sensex, uh, Nifty 500, all are showing different wave counts. Which one? So, Praveen, let's not get to the wave count. Just see each index at its merit, is what I would say, Praveen. Which one is right, you might only get to know in the hindsight, but somewhere when you try and study more and more index or stocks, you might get some idea in which, what are they exactly doing. So, Om Prakash, as I told you, we don't want to get into the stock specific analysis because that may not be right even for us, because there is India charts where we try and provide those suggestions. So it may not be wise on strike. Over here, the whole idea of doing this sessions is that, if you'll have any issues with strike and understanding or something, then I can help you out. And the broader idea is that how I'm trying to use, how I'm using strike and trying to form a view. That is what this purpose of this session is. So it is not to give a recommendation or so on, but it is more to make you all understand with the concepts and how you can make the best use of strike. I think that is what the objective is. I hope you understand. Thanks. Thanks, Om Prakash. Uh, So fine, I think I've addressed all the questions. It's 5:30 right now. It's a holiday tomorrow because here in Mumbai there is a BMC election. So we'll catch up on Friday, same time 5 p.m. and let's see. I mean, how do we get the weekly closing? Because as I told you, weekly closing will be important to track because the Nifty index is at the 20 week. So let's see what happens, and let's see if the bulls are able to defend the 20 week, and more importantly, do we end up getting a positive weekly close or no? So let's catch up on Friday and discuss all those things.